Good afternoon. This is Keith Brown in Moultrie, Georgia with some cash commodity commentary for Tuesday. It's about 3:50 Eastern Time. We're waiting on the supply-demand numbers to come out tomorrow, but what are they going to tell us we don't already know? As far as cotton's concerned, we have terrible demand and record supply. We were in hopes today the market might try to trade up a little bit, but that was not to be the case. We closed just south of 75 cents. That's still 2 cents higher than where we finished on August the 10th when the government came out and said we had 75 million bales in the carryout. So again, the cotton market is beginning to resemble roadkill. You just really can't distinguish what it is anymore. And I think piling on another million bales in the carryout really doesn't do that much for the market. But we are looking for a U.S. crop to come in smaller. We know that Australia is suffering on some rain. We know that India's monsoons have picked up pretty good. We don't have a clue about China, so all in all, we may see ending stocks yet rise. So we'll just have to wait and sweat it out and see what the market wants to do. For corn and beans and wheat, I guess the conventional wisdom is that corn is looking a little friendly in terms of them lowering the crop and lowering carryout. Whereas the beans, I don't know. They might lower just a little bit, but the thinking is that Hurricane Isaac did put out some water on the eastern grain belt, so we'll have to see. All in all, the bean balance sheet still very bullish, as is corn. But ever since corn put its high in on the last crop report, August the 10th, at 8.49, this is December corn, we've been coming lower ever since. New crop September has gotten very close to $7, and with some basis, I guess a guy could lock in $7 and ought to have done that. But nonetheless, we'll still see just how these numbers do play out for us. In the wheat, we might see the USDA lower the wheat crop a little bit globally. I think Australia's had some dryness out there, so that might very well come into play. But jumping around and getting back to these beans, they've had a pretty good break in the bean market. As a matter of fact, the spot month has dropped pretty close to about $1, I think about 90 cents. So that's a pretty good break in the beans. We would just have to see if there's any more negativity in the report. I think the psychology, though, of the market is this, is that if the numbers come out bearish, obviously that's bearish. If they come out neutral, that's probably a little bearish. I think the markets really would like to have, a new infusion of bullish news to create another level of urgency. That may come, of all things, from the Federal Reserve, which might stimulate the economy in some type of concerted global effort with other central banks. We'll just have to see what that looks like. But that's been sort of the undertone of it's been supporting the markets in general. Fuel was up today because the dollar was down. We'll see what that's about. If you have any questions or comments, of course, give us a call, 1-800-910-1910. Thanks for listening.